German investors have a long history of lodging money in real estate through both funds and direct investments. There have been hurdles and challenges in the past, but over the long run, this has proved a safe and a steady investment. Now money from institutions and wealthy families with an international flavour is also flowing in. We are here to ask Andreas Steyer, CEO of the Consus Group, what are the prospects for German real estate as an investment class? It's a difficult time for families to invest in equities and find good returns from those markets at the moment. Do you find that German real estate is a more persuasive story for those investors?
Of course it is. Now in Germany, I would say it's a unique environment. Germany is the biggest economy in whole Europe. Prices are still lower than in the other cities. If you look further on the environment, if you look on the interest rate we have in Germany are very low. If you look on the population in Germany, we have now, the newest forecast shows us that we have an increase in the population over 80 million. If you look on the age of the people getting older and older, they need living room longer than expected. If you look on the movements of the people, they are moving from the countryside into the cities where the jobs are, and that's why it's a very interesting opportunity to invest, especially in the asset class of residential in Germany.
We speak to a lot of private banks, Andreas, and they are all telling their clients to invest in German real estate, whether they're in Asia, whether they're in Europe. It's quite a trend. Are you working with some of these private banks and perhaps the family offices in partnership to arrange these investments?
Of course, we are working together with private banks, institutional investors, of course, and as well with family offices. Most of these investors are highly interested in our business model we have as a developer for residential, but it's difficult to understand our business model. And that's why we have to explain a lot to the investors. We have to educate them. Then we are not comparable to a portfolio holder, but we have, if you look on our business model, we have sustainable cash flows, we have a lot of projects, we have a lot of de-risking approaches in our company. So with the time, I guess we will have a lot of more investors because most of them like our equity story.
I think a lot of portfolio managers will be asking, how do they actually evaluate real estate developers? Do you think we need some kind of systematic approach to do that?
We spoke to a lot of investors in the last weeks and months to explain our business model. And we see most of the investors are not able to compare a business approach like a developer, like we are, to portfolio holders. And that's why we started a project with some famous universities, for example, St. Gallen in Switzerland, to create a new metrics how we can evaluate and track a developer like we are on the stock exchange.
Should real estate be at the periphery of the portfolio in the alternative asset classes, or perhaps much closer to the core?
I would strongly recommend that it should be a core investment in such a portfolio, especially if you look on the residential asset class and if you look on the affordable living asset class for residential. That means no matter what happened in the economic, if you have an affordable living for the mid-income people, you have a sustainable product, and it's exactly what we are producing with our business approach, and it has to be in the portfolio.